The CPSE ETF's fifth tranche opens today for anchor investors, and retail investors can subscribe from tomorrow till the 20th. The ETF seeks to raise 3,500 crore rupees. Vishal Jain, the head of ETFs at Reliance Mutual Fund, who also manages the CPSE ETF, joins us now to talk about that. Vishal, good morning. Thanks so much for joining us. The government is looking to raise up to 10,000 crores, and there are, I understand, 11 companies that this CPSE ETF consists of: ONGC, Coal India, IOC, Oil India, PFC, REC, etc. Can you tell us what is your own expectation with regards to investing into this ETF and the returns that one could get?
So good morning, Sonia, and just to give you a brief background, the CPSE ETF was launched in March 2014, and post that we've had three tranches. This is the fourth one. In total, till now, we've raised about 28,500 crores through the CPSE ETF over the last 5 years or so. We're getting very good demand coming in from investors at this point of time. The issue opens today for anchor investors, and for non-anchor investors which is on tomorrow, on 20th, and on 22nd is a non-anchor portion. If you look at potential of these companies in terms of valuations are very well placed. If you look at the Nifty PE ratio, the Nifty PE ratio is around about 26 or so, whereas the PE ratio of the CPSE index is about 8.5. So in terms of valuations, these companies have, are coming at very good valuations. If you look at dividend yield of, these companies, the dividend yield of the index is nearly 5.25%, whereas it's just 1.25%, for the Nifty index. And on top of that, the government is offering a discount of 4% on this current offer. So I think when you take all these 3 or 4 points, and put that in perspective, I think investors will benefit a lot by investing in the CPSE ETF.
Okay. I also wanted to point out, how the growth of, the returns from PSUs have been. I mean, if you look at the year-to-date returns, the returns have been about, 4%, whereas returns from the Nifty have been much higher. So, while I agree with you that they are valuation-wise very attractive, the returns from PSUs itself is not very high.
Sure. Lata, we have to understand that, at the end of the day, the CPSE is a theme. It is not a broad-based index. When you look at, say, returns since inception, that means when we launched in March 2014, till now, I mean, I was just looking at the returns, just before we came. Currently, it's trading at 27 rupees, and we issued that at 17 rupees. So if you look at CAGR, this index itself has given a CAGR of about 11% or so, which is not too bad. I think certain themes, investors should have, a small portion of these themes in their portfolio. And, looking at the fact that a theme, again, is not a broad-based index. There are times when a theme will outperform the market, and there are times when it will underperform the market. If you look at the kind of returns it has given from our last issue, that means end of November 2018 is when we had the FFO3. If you look at returns since then, it has given 18% returns in the last 3 months, whereas Nifty is given about, 5.5% returns in the same period.
Okay.
So in terms of returns as well, I think these stocks have recovered in the last couple of months.
Okay, so you're saying 18% returns is what you've got over the last 3 months. So realistically, what kind of returns can one expect, say, over the next 6 to 12 months?
Well, it's very difficult to, put a number on that. But as an asset manager, look, our job is to ensure that, we have the best companies in the index. And when you look at these companies, they're very fundamentally strong. They're the 11 best government companies that you can find. Everyone's talking about the fact that, India is going to grow at nearly 7.5–8% for the next, 8 to 10 years. India is going to become a $10 trillion economy. And, if we're going to be growing at that rate, I think it's very unlikely that core sectors are not going to participate in that. Therefore, keeping that in mind and looking at the fact that these are, fundamentally very strong companies, I am quite positive about, the growth prospects of these companies. And to top it all, the icing on the cake is the fact that the government is giving a 4% discount on the stocks, at this point of time.
Okay, no, that certainly is an attraction. But would you say, if you're advising as a wealth manager, would you say this is primarily a dividend yield advantage? How should investors approach it? More than capital appreciation, is it dividend yield?
I would say both. As I said, I think valuation-wise, these companies, I think, are undervalued at this point of time. And definitely the fact that, dividend yield is high, that's definitely a positive for investors. So I would say not only dividend yield, but the fact that, these companies will grow, as you move ahead and as the economy grows.
All right. Vishal Jain, all the very best for this tranche of ETF as well. Thank you very much indeed for joining us.
Incidentally, today ONGC is up almost 5%.
No, you see SBI, okay, SBI is not in their list, but PSUs, of course, quite a few of them have been doing well.
Okay, well, we'll keep an eye out on that. But for now, let's take a short break. Still flat for the markets, but better yet for the mid-cap space. We'll come back with more.